Hi, this is Mr. Guy, and I'd like to talk about savings and investments. And this is one of the most important things that I think that we should be looking at and doing. And this is really an important concept. And I want everybody to get the idea that I really want you to save your money. And I want you to save your money, put it away, and do not touch it, and do not touch it ever. And that doesn't have to be all of it. Doesn't have to be 50% of your money. Some people say, well, Mr. Guy, I spend 60% and save 40%. And that's great. And you can put your savings in different piles and different pots and different buckets. But the idea is 10% of your money should be saved and it should not be touched. And I get that information from basically Susie Orman and Rich Dad Poor Dad, Robert Kiyosaki. There's books like The Wealthy Barber. There's the books like um, The Richest Man in Babylon. There's just so many books, so many financial books saying if you want to be financially secure, and that doesn't mean you're rich, doesn't mean that you're a billionaire, but if you want to be basically safe with your money, you want to be secure with your money, and you don't want to have any money issues, you save 10% of your money. So save early and save now. You're 18, maybe under 18, start doing it and don't touch it. Also, have buckets for maybe you're putting money away for a rainy day, you're putting money away for a car, you're putting money away for college. Have those different savings accounts in different places. A savings account is a great place because it has no risk to it. You're not going to lose your money, and it's small earnings. So there's low risk, low return. Once you've gathered money, and I would say once you put money up into like $1,000, then go ahead and put that money into a mutual fund or buy stocks or do something with more risk. I think mutual funds are great. I think there's mutual funds about the Standard for stock market, the Dow Jones. There's different ones that are very safe. They're with big companies, and you might be investing in 50 or 100 companies. You could put 1,000 in there, and you can add to it. I think those are great ways to get higher returns. So I looked at a couple scenarios, saving $1 a day at $30 per month at 18, and until you do that forever, but until 65, if you have 10% earnings, you'll get $313,999.14. If you earn 12.73, you're going to get $786,912.64. I picked that mainly because that's been the stock market return, average returns for the stock market since 1981. And then 15%, you'll earn $2,647,259.97. And normally I look at 15% as a goal to shoot for, and that's a good. And then if you're at 20%, it's much higher. Now, I really couldn't calculate putting 10% away of your money because every year you might get a raise. Every 10 years, I figured you might be going up $10,000 in earnings and whatever. So it's just very hard to do. So I figured making about $25,000 at 18, you could save 10%. That would be $208 per month. So if you just save $208 per month every month, all the time until you're 65, at 10%, you'd have $2,176,537.43. At the stock market average of 12.73, you'd have $5,454,271.30. And at the whopping 15%, you'd have $10,293,868.32. And that's pretty amazing. But I also did check at 20%, and you'd be over $1 billion. So just realize savings will turn into investments, which turn into a lot of money, and you just have to do it. Savings is for the short term. There's little risk, little return. Investing is always for the long term. It's where you put your money away and you can't use it, you can't get to it. The risk is higher and the return is higher. So I put this on the bottom as like a continuum, low risk, low return, all the way to the highest risk, high return. So as we go more towards the right and down, your actual returns are higher and your risk is higher. So savings is guaranteed. You're not going to lose your money, at least up to $250,000 per account. And it's also got less than 1% interest rate. Money market fund accounts, again, if they're in a bank, they would be very low risk and then low return. CDs can go up to maybe 1 or 2%. They're also in a bank. They're guaranteed. You're not going to lose your money, but not that high of a rate. Bonds, if they're government bonds, they're actually by the federal government, they're very secure. But if they're corporate bonds, they're not so secure. And some corporate bonds have lost money. So if you have a corporate bond, it's a higher rate than a government bond. The longer the term, the higher the rate. Then you have stock market mutual funds, and I call them stock mutual funds. And that's basically what I was talking about, the Dow Jones or the Standard & Poor. There's thousands of mutual funds, and they're in stocks, and they're in bonds, and they're in a mixture, and it basically diversifies for you. And those you can earn anywhere from 5% to 25%, depending on how aggressive they are and how much risk you want to take. You then can purchase large stocks, which are fairly safe, and you get smaller stocks are less safe, and new stocks are really unsafe, and you're not sure what they're going to do. You can go into real estate and business opportunities, so you're looking at going from maybe 15 to 20% in those. So the highest risk, highest return is the business opportunities and real estate. So these are different ways to invest your money, and I always look at the mutual funds and stocks and bank accounts and bonds. Now, things to save for, and these are things that everybody's going to need sometime, is you should have 3 months of total expenses to live on. So whatever your budget is, multiply it by 3, and then if you lose your job or if you need money for emergency, you have it. So put it in a savings account, keep it in a savings account. So it might be a savings account that has $3,000 or $4,000 in it for that emergency. But anything above that, you can put that in to another savings account to save for a wedding. The average cost of a wedding is $26,444, and I've seen some that were in the $60,000, $70,000, $100,000 range, and my wedding was like less than $10,000. But the honeymoon is not included. Realize that if you get married in the 30s, you're going to have to pay for it. If you get married in the 20s, maybe your parents will pay for it. The median price of a house, that's like the middle of the housing prices, is $188,900. To get the down payment and the closing costs, you need $49,144. Now these numbers vary, but that's just an average of what you need to shoot for if you want to save and save money to buy a house. The scary number is with Social Security, with retirement. You'll need basically probably to start a 401k and a retirement plan and take your salary today, say it's $25,000, multiply it by 10 or by 12 to get how much you'll need for retirement. They estimate it's about $1 million to $1.5 million per person for that 30 years to live on. And then you do have Social Security, and then you do have pensions. Interesting number I found was 18 years from now, college will cost for one student for 4 years $206,792, which is a huge number. And are you going to be getting loans? Are you going to be getting student loans, parent loans? Or are you going to get scholarships? But that's a huge number that you need to save for. And then also, if you need a down payment on a car, a vacation, repairs, a boat, whatever, there's a lot of things to save for. And see, notice these things do not have your 10% save for, and don't spend it, except for maybe you could say your retirement might be there. If you're doing that, that's great. So the first slide was really showing you that everybody can be financially secure and they can be wealthy, they can have money. Second one is all the things that you need to save for. So when you're looking at spending, is this candy bar worth it? Is this car worth it? Look at what you need to be doing on that. So hopefully this is helpful and can answer the questions A on the personal finance report. So we've got some videos for answering risk, return, also looking at savings versus investing and things that you need. Thanks a lot. Have a good day now.